Hello, investors and traders, and welcome to the Midweek Report. I'm AJ Monty on this Wednesday, December 18th. We're coming into the final 2 minutes of the trading day, and as you can see here from the Dow Jones Industrial Average ETF, this is ticker symbol DIA. We're down over 1,000 points on the Dow. The Fed fund rate was cut by 25 basis points. We had some dissension on the part of the Fed, which has spooked the market. And as a result, we have sell stops being triggered. We have margin selling going off. We have all kinds of pressure on the market right now. And as you can see, we obviously hit my downside target here from last week. And not only that, we blew right through that 437.55 level. We're still approaching this gap fill point here, which I do believe that gap will fill. But if you've been following along with my market reports, you'll know I do not draw my target lines on Wednesdays. I leave that for Friday. And as you can see, all of the previous downside targets have hit. So keep your eye on that gap fill. We might see a little bit of a bounce. We have a long stretch of red down here. We have 10 red candles in a row. Last time we saw that was in the late 70s, believe it or not. And this is looking pretty bearish right now. But again, I think we could see a bounce, so be prepared for that. As we get into IWM, you'll see that we have blown through that downside target. We already filled that gap down there. The volume is increasing on the way down. So I do think that we'll see a little bit more downside pressure as we approach this support level from October back here. And so we could see a little bit more. And then again, I think we'll see a bounce in IWM as well. Looking at 𝐶𝐞𝐫 as we're coming into the final seconds here. Look at that massive red candle hitting that downside target, filling this gap from down here. And there is the official close of the market. Look down below on the Qs. You could see that we did cross down below the momentum line on the CCI. That CCI tells us that once that zero line is crossed, again, AKA the momentum line, we generally get 2 to 4 days of downside pressure in the direction of the cross. With that increase in volume, again, I think we could see a little bit lower and then perhaps a bounce. Again, I'm not going to get ahead of myself on that bounce until we see at least a drop in volume. We need that to happen before the buyers would even think about trying to pick a bottom here. So that is my analysis on 𝐶𝐞𝐫. Looking at SPY, you can see again, downside target is still open down here at 581.22. I am keeping that in force as the volume again is increasing on the way down. Remember how we read the volume. If volume is increasing on the way down, it tells us the sellers are motivated. Once the volume starts dropping, that's telling us that the sellers are losing their momentum. That's more of a bullish sign. It's bearish when the volume is increasing on the way down. It gets a little bit more bullish when the volume drops on the way down. The opposite is true. If you notice back here, I cited the drop in volume at the top. Remember that from last week? I said that drop in volume versus the price is a negative divergence, a price volume divergence. And I said that is bearish. Why is that? Well, when the volume is increasing on the way up, the bulls are charged up. When we see the volume drop, like we did here, that is bearish because the buyers are losing momentum. And it's not hard to see what happened as a result of that. Now, of course, not every time are we going to see a big red candle like that on the S&P just because of a volume drop, but it's something that you definitely want to pay attention to. Keeping an eye on the VIX. What did I give you? I gave you a guarantee that the gap would fill. Well, today the gap absolutely filled right there. Look at that. There is no shadow whatsoever on that VIX candle. It's all green. It closed exactly on the high. Look at the minute by minute chart. Look at that VIX. On the close, it rallied into the close, which means that the fear is starting to creep into the market. Remember, the VIX is known as a fear index as well. So when the VIX was on the historic average lows, like I reported a couple of weeks ago, that was telling us that the market was getting complacent and that there was no fear. It was more greed taking over the price action. But guess what happened? Greed was replaced by fear on this day, again, Wednesday, December 18th. So keep an eye on this. I do believe that we have some more upside potential on the VIX. I have an upside target still in place back here from October, and that upside target on the VIX is 26.68. It matches with this as well. I carried that on over. Today's high on the VIX was 25.47. So we're just a little bit more than $1 away from hitting that price target. And then I do believe we're going to see a pullback on the VIX with a possible ABCD pattern to boot. What does that mean? Well, again, keep in touch with my videos and you'll learn something each and every week. If we put an A down here at this pivot, we're up to a possible B. The B can only be put up there when we get the pivot. Once B forms through that pivot, we then would expect a pullback to another pivot, which would be C, and that could ultimately lead to a higher D. That is the ABCD pattern as we define it. And again, every single stock, every index, every commodity trades in ABCD patterns, both on the way up and on the way down. Remember, tonight, being that it's Wednesday, we have our rapid fire stock analysis session. If you're interested in signing up for our free 15-day membership, you still have time to plug into our rapid fire from 6 to 7 p.m. Last week, I went over 60 stocks. 37% have already hit their targets in 1 week, and I'm shooting for an 80% hit rate. Our average hit rate over the last months has been 82%, a little bit better than the 82%, actually. It's 82.2%. It's the best hit rate in the world. If you want to learn how to do this, come on by. Sign up for your free membership. We don't ask for credit cards or anything like that. We don't try to trap you into some kind of an obligation. We don't play those games. And you will be able to come along and trade with us. And look at this. As I am describing the VIX to you, what just happened? 26.68 was just hit because the VIX is still trading after hours. So there you go. That target has hit live as I'm doing this recording here for you. So folks, stay tuned. Friday, we have a lot of information coming out. I am so excited to be able to help you and do these videos for you. I can only hope that you like it as much as I like presenting. Please make sure you comment. I'd like to have any questions you might have or commentary on what you think the market is going to do. And of course, those likes are very, very important because it helps drive the channel and get us put on the algorithm for everyone else to see. So have a good rest of the day, and I'll talk to you on the next video. So long.